It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat, of course, will take us through the charts. Here to take us through his picks for today, Aquiles Larrea Jr., the founder and CEO at Larrea Wealth Management. Aquiles, great to have you back on the show. Would love to start with your thoughts on this market action we're seeing, or sort of lack thereof, I guess, even in the wake of some big earnings. We're kind of directionless this morning.
You know, it's funny. We're talking about market direction or lack thereof, and this is no surprise. I mean, right now, the big thing that I'm more worried about is inflation. You know, inflation is affecting right now capital expenditures, innovation, AI per se, and you know, the higher that inflation goes, we were talking about lowering inflation at some point this year, and now we're talking about, is it going to go much more higher? I mean, we talked about 4%, and the cost that affect capital expenditures, the cost when it comes to everything else, whether it be maintenance, repair, replacement, when it comes to corporation, can't be measured at this point. It's eroding any type of small return that could be happening here, and that could affect corporate earnings. You know, so these are just, you know, inflation, more of that factor that is eroding corporate earnings, and then at the same thing, we're starving technology expenditures, which isn't the best thing to do, especially if you're thinking over a long period of time. So you, at the expense of now, of you know, the expenditures that you're going to do now, you were thinking I was going to get a certain amount of return, and then all of a sudden that's been eroded away by the higher interest rates, and that could lead to more problems economically.
I certainly could. You've got some big names with earnings coming up, too, in your big three today. So let's talk about your first one. We're just now less than a month out, as they're one of the last big tech names to report. But you've got the monster here, NVIDIA.
Yeah, and you know, NVIDIA is one. I would see everything right now is really more a flight to quality. You know, people are looking for conviction, people are looking for certainty, and NVIDIA is one of these names that we see that happening. We're looking for a 10 to 14% growth in an 18-month time period. We see a near-term consolidation in the industry. We see that pullback of sorts. Same thing across the sector. We believe that there's still decent growth available. So that's another positive for this stock. Also, that the fact that they've gone through the pricing pressures per se has been a boon to them. So we believe that the stock has room to run this year. We should see a nice double-digit increase. And then at the same time, although there be challenges, we think that they should do well in the long term.
All right, Rick, so as we look at the technical setup for NVIDIA, we did see this rotation away from big tech, but over the last month, we've seen some movement back in. NVIDIA itself up more than 16%. But what are you seeing in terms of the technical setup?
Yes, we bounced off a very notable point. The area between about 165 to 170 represented a gap here and a subsequent short-term low. But then very often this general area has come back into focus. Most recently, it's about where we bottomed out. We filled the gap, and now we have had a rally that took us above 195. That's our green line here. Highs, and then kind of a similar picture here. So we had this range-bound area. Now the price activity is close to challenging this very small gap right here. That gap level came in around 205 or so. Then the next stop for the bulls would be 212.19. So a pretty interesting situation. We did break through this boundary line here. You could draw just this trajectory line, not really a very strong trend line, just trying to illustrate that we are seeing higher highs at this point. Now we can see that RSI, despite being above the overbought threshold of 70, has broken this green trend line, is on the verge of potentially drifting back below. So that would be more of a bearish type of signal here if that were to happen, especially if we were to break down through the confluence of our 5-day EMA and our trend line. Both of those come together just shy of 200. Still, though, that doesn't necessarily mean a collapse is coming. It could just be a slowdown as traders reassess, take profits, and you know, examine their their current positions and perhaps try to re-enter. So anyway, we can look at our volume profile here showing our node in question, 175 to 190, with our point of control, our heaviest trading area of all, coming in around 179. So that's the key area to look out for, mostly matching up with our long range bound period.
All right, as we take a look at NVIDIA today, just down ever so slightly, about 0.25%, more with the broader market here. Your second pick, Aquiles, also another huge name here in big mega cap tech. We also got a massive announcement, probably the headline of the day, in that CEO Tim Cook is stepping down. So take us through Apple and what your outlook is here.
Yeah, obviously Tim Cook is stepping down, and that has caused a little bit of trepidation in the stock right now. But more importantly, we have a fan coming in. I mean, he's been with the company a long period of time, so he's not new. But at the same time, there's that uncertainty that always comes with the change in regime. And although this year has been somewhat lackluster, Molly, I think that we believe that Apple, being the dominator it is a turnaround target. We are going to face some near-term resistance, but I think with a new direction and the brand loyalty, I mean, we got a lot of fans in the Apple, company. So that's another thing we have to remember. We feel relative to its peers, there's a lot of inherent value in the stock. And I don't think that that's going to change with the new CEO, unless there's some complete breakdown of sorts board-wise, and we don't see that happening. We think that the stock could be going up easily double digits this year in a 12 to 18-month time period. We also feel strong for the sector. As Apple is the dominator, we should see some really excellent move to the upside here. We may not see 30%, but a double-digit increase, I will take that all day long.
Yeah, many sell-side analysts seem to agree with you too, Aquiles, because in several notes that I read this morning said they wouldn't make a change like this at this time unless there was some resiliency in their upcoming earnings. So as far as the setup that we're looking at, Rick, Aquiles did higher. We are under a little bit of pressure because the announcement of any new management change generally tends to do that. But as Alex Coffey highlighted, perhaps not as big a move as we see with other companies.
Perhaps not, and also some notable similarities to our last chart in many ways. For starters, we had a small gap level that now presents a supportive area. In this case, it's right around the 246 level. We also had not quite as much of a range-bound period, a bit more fluctuations to the upside and the downside. But we do also have a downward sloping trajectory line that price has broken above. But now we find ourselves in a situation where we're potentially breaking below our white shorter-term upward trend line and possibly retesting our blue boundary line as a potential supportive area. So a bit of an inflection point today on the back of this rather big news here. We can also see as well resistance potentially to the upside here, 277, matching up with some old highs and then subsequent lows. After the breakdown, it became highs once more. So now when we assess our moving average picture, RSI not quite as strong as our last chart here. In fact, we never did quite make it to the overbought area, despite showing a little bit of bullish divergence here. So in this case, we are also starting to potentially drift below that trend line here. So if we start to break lower, we have a similar confluence up here to watch out for near 267. In that, we have our 5-day EMA in dark blue and our trend line. A confluence just below could be potential support as well. Our 21 and 63-day EMAs come together right around 261. So finally, when we assess our volume picture here, we have a node that we are still within right now between about 267 to 276. Then the heavy trading area, our point of control, comes in around 256 or so. So if we do start to move lower, that's a very notable supportive area to watch out for. If we start to push above 275, 276, that kind of paves the way to retest those more thinly traded areas at the highs.
All right, and Apple right now trading down more than 1.5% at 268.01 today in the wake of that announcement that John Turnus would be becoming the CEO in the fall. Aquiles, let's talk about your last one here. Not my favorite sector here with Altria Group, but I know you like a dividend play here, and I was looking at this name before we started talking, and they've had 60 increases over 56 years. So does that play into you putting Altria in your big three today?
Of course. Anytime we can have a big dividend over 6%, we are most certainly happy to have it. We're not going to say no to that. Now, imagine you make 10% in growth that particular year and you had a 6%, you just made 16%. Why would you not like this kind of stock? Now, the big reason to get into this is when there's uncertainty, when things are happening that there's a lot of fear out there, you want to own a stock like this because there is such certainty in habits. So in a stock like this, it's a flight to quality that takes over. We're looking at 8 to 9% growth, but with a 6% dividend on top of that, I'll take it. And then we also have that rich dividend history that has gone up every single time. The fact that it's diversifying, we're starting to see different products in the tobacco sector. So it's diversifying within itself. So that's important to have. But more importantly is the fact that this should be, it's a much maligned sector due to the connotation of tobacco and such. But it is also a sector that has shown consistent growth for many years, and you want it to be part of your overall holdings.
Yeah, certainly a habit that's hard to break, probably not hurting their consistent growth overall. But Rick, as we take a look at the technicals here for Altria Group, I am seeing we have some lines that are converging on each other.
Yeah, so I think what you could suggest with this particular price activity we've seen in the near term is a symmetrical triangle type shape. Our two trend lines converging toward each other, one beginning with these highs near 70.50, one beginning with these lows we established after earnings near about 59.50. So from there, we can say that we had some difficulty getting above the 68 level that matches up with some old highs that we saw here. To the downside, our relative lows come in near 63. Another level to watch, 62 based on this gap and a bit of a fluctuation around that level. So now in this case, we have a bit of a different picture. Now our moving averages are much more sideways. The shorter term ones are clustered much more closely together. So here, 65 is the point to watch out for, where we have our three moving averages coming together. So 65, 66 or so. To the downside then, our 251-day yearly EMA comes in at 61.60. So that would be a notable potential supportive foothold to watch out for. RSI also exhibiting similar behavior to our price activity in that it's compressing in a symmetrical triangular shape here. So this suggests lower volatility, which is often a precursor to higher volatility when you do eventually break out from these established boundaries. Our volume profile matches up quite closely with our trend lines in this case here. 64 to 67 roughly would be the breakout points for this one.
All right, as we look at Altria year to date, they are trading up more than 12% and about the same gain over the last 52 weeks as well. Aquiles, great to have you back on the show for Big Three. We do have to have you back for that longer form talk about inflation, though. I'm going to make sure that gets on the schedule, but really appreciate you joining us today. Aquiles Larrea, Jr., the founder and CEO at Larrea Wealth Management. And of course, thanks to Rick Ducat, our lead market technician, for breaking down the technicals for us.